Right. Right. So a bit of a mixed outcome from the Fed. Um, yes, that it was acknowledged that long-term rates higher effectively help with the Fed's job, and that they are near to the end of their rate rise cycle, but they're not ruling out further hikes. And in fact, Fed Powell dropped a bit of a bombshell when he said that they should be focused more on whether they need to hike rather than cut. Um, and I read between the lines that is hawkish and leaves the December meeting as a live one, especially when you consider the recent um, rise in US growth. When you compare it to the rest of the world's economies, that puts the dollar on the front foot. That's something that we talked about, we keep talking about in each of these meetings. So I find it quite hard to sell the dollar and be long of stocks in such an environment. And I'd much rather be selling rallies such as what you might be seeing here on this euro dollar, with the closing price being respected, something we've been talking about all day. We were looking for this setup from the start of the day, and it's playing out quite nicely as we conduct this meeting. And when you look at the US dollar, we might find some support at this closing price. We want to see that in order for that euro dollar to keep dropping. We want to see this deceleration in the US 30. It's the weakest of the three. So this was something I was pointing out in the chat room, that we came up to last week's highs. We were looking for a deceleration. We were looking at these timings. This is an hourly candle that's opened bearish, and we are penetrating that low on this 5 minute chart. That indicates to me that there is intention of moving lower. And this is the sort of thing that we're planning for each and every day, these types of setups. I'm not simply selling at a high or buying at a low. We need to see the price behave in a certain way at particular timings of the market, 15-minute, 30-minute, 1 hour rotation candles, where we tend to see some momentum in the movement. And there seems to be a purpose behind that um, timing. So that's my wrap. Anyone have any questions with regards to today's Fed, and looking forward? Any pairs you want me to dive into particular? Um, there's still plenty on the cards for the rest of the week, plenty of top tier data to follow. We've got Canadian US employment on Friday. For example, we've got the Bank of England coming up today, tomorrow, Thursday, depending where you are in the world, but tomorrow, but it's Thursday. So let me know if you've got any pairs you want me to look at, and I'll happily take a gander and give you my analysis. My thought process is, Shiv, is where are we in relation to yesterday, the start of the week, last week, and the month? So I look for cycles of order flow that repeat themselves week in, week out. I look to sell high and buy low within a particular range. I look at levels such as last week's high, like you're seeing here on this US 30. We came up to last week's high. To me, that's a level. That's an important level. It's trying to break out. Most breakouts fail. So we're at the high of the day. So I'm looking for shorts. I like to use the closing price of the prior day as well as either a support. In this case, I'd expect it to act as support. Or if we're coming up into it, like the euro, where's the euro? If we come up into the closing price like we are here, I expect it to act as resistance. So this is where I can position myself for these types of setups. Um, we can go out to a weekly chart, and I like to look at the market structure. What is the order flow in the market on a longer term basis? So with this euro, the order flow is short. I am in anticipation of this acting as support because of where we are positioned in the market, or where the price is, sorry, in relation to where it's come from. So we're coming into a support area. The lows of these candles, it's acting as support. And until it's broken, then my bias is long. But that doesn't necessarily mean I'm going to be long on the day. Depends where we are on the week. So with this euro, for instance, when I came into today, I noted that following a series of moves up, bears were moving in. So I want to align myself with that movement. The breaks in structure, the breaks of yesterday's low, we pumped up into the closing price. That proved itself as resistance. It came lower. And we talked about that before the Wall Street Open. And we're getting the same perspective set up currently. So I hope that helps. If you follow us throughout these meetings, you'll pick up on that. I basically repeat the same stuff each week, each day. I give morning videos and I explain my outlook and why I'm biased one way or the other, depending on the cycles of order flow and where I see supply and demand zones and where the levels are on any particular day. Euro dollar, I've just shown you that, Rafazo. So I'm looking for this price to come in back to, this was Friday's closing price. So I'd expect it to act as support as the price drops. It's the same outlook from this morning, same analysis. Now, further out, I'd expect to stay in line with the high of the week so far, Tuesday, and we're breaking out. We broke out of Tuesday's low today, so I see no reason why we can't continue with that trend to the downside. So I'd expect for Thursday to break Wednesday's low. So I'm looking for a break of today's low and the low of last week, which was Thursday's low. If we fail, and if price action behaves otherwise, perhaps we'll come in just to above the lows and turn higher. And if we break Wednesday's high, then I'm going to flip my outlook to bullish and position myself in line with what is occurring. So to the upside for a squeeze of these shorts. Yes, back testing is very worthwhile. Back testing is very worthwhile. Markets, the character of markets change, but I wouldn't say the order flow doesn't change. You'll get more volatility, less volatility, consolidative types of markets, depending on what's going on in the world from time to time. But you still have, the market still has a function, and that is to fill orders either up high or down low and rebalance itself. So when the market comes out of balance, so for instance, comes out of balance, so in here is balance, and when it moves out of balance, it has a duty to come back into balance and meet orders that are coming up to the price and they're sort of meeting in the middle. So you get this effect, so a move up, and then you'll get orders stacking up in line with the movement up, but you'll still have the price coming down to meet those orders. And the demand, if there's enough demand to meet the liquidity, then you should see a continuation as demand starts to outstrip supply. And that's how you get trending markets. So it's about identifying those supply and demand zones and positioning yourself accordingly and looking at price action around those areas, such as this euro. So that's the supply zone. What was the price action? So if we come down to a lower chart, you'll be able to identify that this market is decelerating on a 1 minute chart. That's more easier to see. The lower we come, probably better to show you on the US 30. That's what we were talking about earlier, I believe. So supply area, last week's highs, look at the price action. Very different to that. So it's decelerating, and you're looking for triggers to move in line with the deceleration distribution of that instrument to the downside. Doesn't always work out. Sometimes you get in too early. Sometimes it catches you out and continues. Markets move up, pull back, consolidate, and continue, or they'll reverse, or they'll just go sideways. So, it's impossible to be right all of the time. Yes, gold. I think we've still got that level from earlier in the week, 76. No, we've broken it. So let's have a look. I'm just going to completely clear off this chart. Drawings. Right. What we were looking at. Can't remember where we were with gold. I'll have to start from fresh. Right. Yes. So we got this strong low that created that high that broke these levels here. So we're bullish overall, but we're in anticipation of a pullback of this move. So that's what we've seen. That's what we talked about earlier in the day, and that's what played out pretty much to the pip, I believe, when it came down into here in the US session. So it is below the closing price of yesterday, 83, 84, call it. It's sort of camping out below yesterday's low, and we've come down from Friday's highs, last week's highs. We've continued to break down. So yesterday was the first day of breakout traders, and the bears stuck with the program to short gold, making fresh lows on the week, and we're closing relatively low on the day, possibly around the low of yesterday. This could turn out to be a low, and we could move up, considering how far into this uptrend we've come into. So maybe we're about to make a turn to the upside from this. Maybe this is a failed breakout, setting up for a move higher. But if we stay below that closing price, I remain biased to the downside to target last week's lows. Okay, guys, so I think we're going to call it a day here and get together again in the morning. I don't think I've missed anything. So, yes. So, yeah, we'll wrap up there, and we'll get together tomorrow morning around the open of New York. Okay, so thanks very much, and see you tomorrow, guys.